Well, I think, with the major markets moving the way they've been moving since the Trump election back in November, I think the mining sector has been ignored, a little bit. There's even probably some negativism surrounding gold, with, people pointing to higher interest rates and all the potential new administrative, stuff the U.S. government's going to launch. And for some reason, that is somehow perceived as being anti-gold, which, is complete nonsense. I point to a piece that you put out just last week, I think it was. I think it was, very well written, where it talked about, interest rates going up and gold actually going up in that environment. So this whole, headline-driven sentiment that, Wall Street's pushing, that somehow higher interest rates or a growing economy is somehow negative for gold is a complete, fallacy. Gold can go up quite easily in that environment, and gold can go up in a deflationary environment as well as an inflationary environment. So, you need gold in your portfolio to not only, take advantage of what I think is a, very necessary asset in everyone's portfolio, because after all, gold is the most superior currency on the planet. But, timing these things, if you buy, gold at, $12.40 today and all of a sudden it's, $12.20 tomorrow, it's not something you should be too worried about, because, this is, it's a long-term, investment that everyone should have. And, people that own U.S. dollars, Canadian dollars, British pounds, yen, their currencies are falling on a regular basis, and gold is not. It's actually holding up extremely well against all currencies around the world. So, and also the chart activity, you ask about what's happening to gold now. I actually love the way it's trading. I think that I've been watching it just kind of have this very tight trading range over the last week or two. I've just been waiting for this day where it's going to pop up a little bit because I've been expecting it. And lo and behold, I turned on my quote machine this morning when I woke up, and gold's up $10, and it's looking really good. So I think we're at the beginning of a new phase, bull market. So with everything else going on and all the other things I've already said, not only gold should be held, in all times. When you can catch the beginning of a gold cycle, which I think we're just getting into now, that's the ultimate time to have gold in your portfolio. Well, the mining sector has got to be one of the more difficult sectors to invest in because, it is, the underlying business, First Majestic Silver can be doing very well. But if, silver is down one day, the stock could be down, 50 cents or whatever, as an example. And yet the fundamentals of the business doesn't change, but yet the market sentiment is that, everyone's thinking, okay, well, if silver's down today, it must be going down tomorrow, so everyone sells. And then all of a sudden, silver goes up and then the stock goes up. And, it's a very chaotic and crazy market. I don't know of another market quite like it. People have, drawn analogies to the biotech sector, but I even think mining is even more difficult than the biotech sector. The biotech sector may have more risks, and then there's maybe less successes or something. I don't know the exact numbers in the biotech sector. It's not a sector I've really invested in. At least in mining, if you've got, your ounces developed in the ground, like in the case of First Mining, who's got over 10 million ounces of gold sitting in the ground, and then First Majestic, the number somewhere around 500 million ounces of silver sitting in the ground. So, these ounces aren't going anywhere. So, if silver's at $17 or $25, those ounces are still in the ground. And it's so, but investors, for whatever reason, they tend to get scared or get overly optimistic, and it creates these big swings. But, I've been quoted as saying, many times, I think even in our interviews, Daniel, about, the high frequency trading and about the hedge funds who trade this market. There's just so much money floating around out there. And the mining sector is quite small. You're looking at, like, First Mining Finance having a market cap of about, $500 million, which is not a bad sized company. But in the whole scheme of things, it's a tiny company. So when you've got, 6,000 hedge funds out there that are playing momentum, and all of a sudden they want to be invested in gold or silver, and they look around and say, oh, God, I've got to buy First Majestic now, and everyone does the same thing, and then all the shorts start to cover like what they did last summer. We had a short position of somewhere around 18 million shares in early 2016, and by the summer of 2016, that short position dropped to somewhere around 4 million shares. And quite interesting, I just looked at it the other day, and it's back up to 14 million shares short again. So you get silver going through $20 here, which could easily happen, and all of a sudden all those shorts, you not only get the longs coming in because they're getting excited again, they want to have exposure to this phase, so you bring a whole bunch of new investors in, then you get all these shorts covering at the same time, and last summer the stock went to $25 in a matter of a couple of months, and that's what happens in the mining sector. It's extremely exciting on the upside, but on the downside, unfortunately, if you're in at the wrong time, you can get hurt quite badly. If you were to phone a stockbroker, I'm not sure about in the United States, but in Vancouver for absolutely for certain, if you were to phone a stockbroker in the last 30 seconds of trading, and you told your stockbroker, oh, by the way, buy X amount of shares of VC stock, and then take out the offers because I want to close it, a couple cents above where it's currently trading at, that stockbroker is going to say, sorry, I'm not going to take your order. And they just simply won't do it because they know it's not right. And you can get a fine, for doing stuff like that. Yeah, I don't know how some of these people do it. They're electronic funds or their computer programs, but right in the last minute, right in the last 15 seconds to go, you see a couple of bids get knocked out, and the stock could be up 3, 4, 5 cents all day long, and then all of a sudden the exact amount of shares are sold on the bid in order to knock out 2 or 3 bids in order to knock either close it unchanged on the day or even sometimes even negative on the day, and then it may have not even traded at a price all day long except in the last 5 or 10 seconds of the day, and it's shocking to see, and I'm surprised the regulators don't catch on to it. I'm sure they see it. It's just happening hundreds and hundreds of times a day, and it's just probably too much work for the regulators to follow it all. But yeah, the only thing that makes sense to me is this short. The guy that's short, he's just trying to dissuade people from buying the stock, right? So he's trying to make it look as negative as possible. So they do it in silver, they do it in gold, they do it in stocks, they do it in currencies. It's the same story we hear all the time about manipulating markets, right? It's not very often that you see 300-meter holes of gold grading over a gram to a gram and a half range, and these are tremendous holes, and we put 4 holes out. It wasn't adding to any resource. These weren't. We've known this resource existed. The market's known this resource has existed for several years. Similar numbers were coming out on similar drill programs back in 2010, 2011, and the market, loved it then. I think the company we bought that owns Springpole, I think, was trading in the $3.50, $4 range at the height of the market, and it was a real darling in the gold space, and Springpole is a very large asset. Springpole is one of the largest undeveloped gold properties in the world, and it sounds like that's a big statement, but in fact, it's quite true. There's not too many 5 million ounce gold deposits sitting around that's undeveloped, and particularly having a deposit like that in mining-friendly Ontario. So there's not a lot of work. It needs permitting, of course, and then permitting's not always simple, but the local people that live in the region need jobs. They're very supportive. During the drill program, we had about 30 or 40 people in the area hired, helping us with all the logging, all the drilling, and then they're very appreciative of jobs. And this mine, hopefully, when it's up and running, over the next several years, we'll employ 500, 600, 700 people. So it'll be a big employer in the area, and we believe that it will become a mine in the future.